Welcome back to Global Current Lens, where headlines are decoded, strategies are exposed, and the truth about global events comes into focus. Tonight, Planation, we're witnessing the return of an old battlefield, not one fought with weapons, but with tariffs, currency shifts, and political will. Planation, the United States and China, two economic titans, are locking horns once again. Of 130% tariffs on Chinese goods by Donald Trump has sent shockwaves through financial markets, trade corridors, and diplomatic circles alike. What does this mean for the global economy? And are we stepping back into a new age of economic warfare? Quick context snapshot. To understand this sudden eruption, we must first remember the timing. This announcement came amid a charged political atmosphere, an election year, with Trump's campaign message focusing heavily on restoring American industrial power and confronting what he calls China's unfair trade practices. The White House revealed that the new tariffs will target a broad spectrum of Chinese imports, from electric vehicles and semiconductors to steel, solar panels, and consumer top. The official framed it as a decisive step to protect American jobs, manufacturing, and technological sovereignty. Financial analysts, however, describe it as a high-stakes gamble. The global economy is already struggling with inflation, supply chain disruptions, and geopolitical instability. A tariff shock of this magnitude, 130% across key sectors, could ripple far beyond Beijing and Washington, affecting factories in Vietnam, suppliers in Germany, and consumers in every major market. The key question: is this a calculated move to extract concessions from China or a political maneuver that could spiral out of control? The immediate event: Donald Trump, standing before a crowd of supporters in Ohio, declared that the era of one-sided trade with China was over. His words were sharp, confident, and unmistakably confrontational. He accused Beijing of flooding U.S. markets with subsidized goods, undermining American companies, manipulating currency to maintain an artificial advantage. Moments later, the White House press office confirmed that a 130% tariff would apply to a long list of Chinese imports, including automobiles, batteries, chips, and solar technologies. The move effectively triples the tariff levels imposed during Trump's first term, marking one of the most aggressive trade measures in modern U.S. history. Almost immediately, China's Ministry of Commerce condemned the decision, calling it an act of economic aggression. In Beijing, state media outlets framed it as proof that Washington is pursuing economic containment rather than fair competition. The markets reacted instantly. The Dow Jones fell over 800 points within hours of the announcement. Asian markets opened to panic selling. The yuan weakened, while gold prices jumped as investors rushed towards safe assets. Global corporations began emergency meetings. Automakers with production lines in both countries scrambled to assess their supply chains. Tech companies dependent on rare earth materials, many sourced from China, faced the prospect of soaring costs and shortages. In Washington, officials defended the move as part of a broader strategy to rebalance trade relations. But behind the official rhetoric lies a more complex motive, one that stretches back decades. Historical and political context: the U.S.-China trade war didn't begin today. It is the continuation of a long, uneasy dance between two superpowers whose economies are deeply intertwined yet ideologically opposed. Back in 2018, Trump's administration first imposed sweeping tariffs on Chinese goods, citing intellectual property theft, forced technology transfers, and unfair subsidies. The move triggered retaliatory tariffs from Beijing and plunged both economies into a tense standoff. Though a partial truce was achieved with the Phase 1 trade deal in early 2020, it never fully restored normalcy. The pandemic, a global shock that exposed the fragility of global supply chains and deepened mistrust. U.S. policymakers began pushing for decoupling, reducing reliance on Chinese manufacturing, especially in strategic sectors like semiconductors, pharmaceuticals, and green technology. Fast forward to today, the political winds in Washington have shifted even further. Both major parties now frame China as America's primary strategic competitor. National security briefings highlight concerns over China's dominance in critical technologies and its expanding influence across Asia, Africa, and even Latin America. So when Trump announced his return to tariffs, it wasn't just about trade, signaling a doctrine, one rooted in economic nationalism and strategic deterrence. China, on the other hand, views this as yet another attempt to contain its rise. Over the past decade, Beijing has invested heavily in its Made in China 2025 initiative, aiming to dominate high-tech industries. For them, Washington's tariffs are not just an economic obstacle, but a challenge to their national ambition. In short, explanation, this isn't a dispute over numbers, it's a clash of visions for the 21st century. Global reactions, the world has responded with a mix of alarm, calculation, explanation, and quiet opportunism. In Europe, leaders expressed concern that renewed US-China tensions could destabilize global markets just as inflation began to cool. Explanation, the European Central Bank issued a warning about potential supply shocks that could reignite price pressures across the continent. In Tokyo and Seoul, officials are watching closely. Both Japan and South Korea rely on balanced relations with the US, China, and both stand to benefit if American companies seek alternative suppliers in Asia. However, at explanation, they also fear that rising tensions could disrupt semiconductor supply chains where both nations play critical roles. In Moscow, explanation, the Kremlin seized the moment to express solidarity, Beijing calling the US tariffs an example of Western hypocrisy. Russia and China have grown closer in recent years, explanation, and this move could tighten that alignment further, especially as both nations seek to build trade networks outside the dollar system. Developing nations, explanation, particularly in Southeast Asia and Africa, are divided. Some see opportunity as Western companies search for new production hubs outside China, Vietnam, Indonesia, which they and India could gain. Others fear being caught in the middle of an economic storm that could slow global growth. Meanwhile, multinational corporations are quietly lobbying for moderation. CEOs from industries ranging from electronics to agriculture warn that the new tariffs could raise consumer prices and disrupt global logistics. Behind closed doors, Wall Street analysts whisper that if China retaliates, for instance, by restricting rare earth exports or targeting U.S. tech firms, the fallout could be severe. Even America's allies are treading carefully. European officials, while sympathetic to U.S. concerns about unfair trade, are hesitant to support blanket tariffs that could undermine global commerce. The message from most capitals is clear. We can't afford another trade war, but the momentum for now seems unstoppable. Economic and strategic stakes at the heart of this crisis lies a deeper contest, control over the next era of industrial and technological power. China is the world's manufacturing hub, responsible for more than 30% of global industrial output. The U.S., meanwhile, dominates innovation, finance, and high-end R&D. Tariffs disrupt the delicate balance between production and consumption, between innovation and execution. 3% tariff is not just a tax. It's a weapon designed to reshape the global economic map. By making Chinese imports prohibitively expensive, Washington hopes to revive domestic industries, incentivize reshoring, and reduce strategic dependence on its biggest rival. But the cost will not be limited to mid-American companies that rely on Chinese parts, from Apple to Tesla, could face massive disruptions. Inflation could rise again, hitting consumers already fatigued by years of economic uncertainty. From a strategic standpoint, this is about leverage. The U.S. is betting that its economic weight and global alliances will pressure China into concessions. China, in turn, is betting on endurance, that it can absorb short-term pain and emerge stronger by accelerating its self-reliance agenda. The stakes extend beyond economics. Tariffs feed into broader geopolitical maneuvering over technology, maritime influence, and global leadership. Explanation, the trade war is increasingly becoming a pillar of a wider cold conflict, one fought through microchips, infrastructure loans, and diplomatic alliances rather than armies. The world's supply chains, already stretched by wars, pandemics, and political fragmentation, now face yet another shockwave. Possible futures, the path ahead could take one of three directions, each with its own risks. Losers. 1. Escalation and negotiated settlement. In this scenario, the tariff announcement becomes a bargaining chip. After weeks of heightened rhetoric, both Washington and Beijing agree to reopen talks. The U.S. might roll back certain tariffs in exchange for stronger intellectual property protections and limits on state subsidies, could expand market access to American firms and stabilize currency movements. Such a deal would calm markets, restore investor confidence, and signal that pragmatism still outweighs ideology. It's the outcome global investors and allies hope for. But given the current political climate, explanation, it's also the least likely in the short term, too. Limited conflict and strategic limit, a more realistic outcome might be a controlled trade conflict. Tariffs remain, but both sides manage escalation carefully. Companies adapt by diversifying supply chains, moving some production to India, Vietnam, or Mexico. The world economy slows but doesn't collapse. Over time, a new equilibrium emerges. The U.S. strengthens its domestic industries, China deepens its ties with emerging economies, and global trade patterns fragment into regional blocs. This would mark the end of full globalization as we knew it, replaced by a world of competing economic zones. 3. Full escalation. The economic Cold War deepens. The dark path is one of unchecked escalation. Retaliates with its own tariffs, bans U.S. firms from its market, and tightens control over rare earth exports. The U.S. responds with further sanctions. Chinese firms off from key technologies and financial systems. Supply chains collapse, inflation spikes, and markets tumble. The ripple effects hit developing nations hardest. Strategic mistrust hardens into open hostility, spilling into diplomatic, cyber, and potentially military arenas. In this world, the 130% tariff becomes more than an economic measure. It becomes a historical marker, the moment the world's two largest economies turn from rivals into adversaries. Tension peak and big question tonight. The question isn't just about tariffs. Explanation. It's about what kind of world we are heading toward. Are we witnessing the rebirth of industrial sovereignty and fair competition, or the fragmentation of the global system that has defined the last century? The stakes are enormous. From the farmer in Iowa to the factory worker in Guangdong, explanation from investors on Wall Street to policymakers in Brussels. Everyone will feel the tremors of this decision. The global order was built on interdependence. But interdependence, it seems, has become the new vulnerability. The United States has drawn its line. China is preparing its response. The markets are holding their breath. What began as a policy announcement may soon define an era. As the dust settles, one question remains: is this the necessary shock to rebuild fair trade, or the spark that ignites a new global divide? You're watching Global Current Lens, where we examine not just what happened, but why it matters and what may come next. If you found this analysis valuable, stay tuned, because in a world where every tariff, treaty, and headline reshapes the balance of power, explanation, understanding the story behind the story is more vital than ever.